We're back on Morning Movers. Workday in the spotlight this afternoon. It releases its quarterly report card after the closing bell. Analysts are expecting earnings to come in just below $2 a share on an adjusted basis on revenue of $2.22 billion. Workday shares are up 3% over the past 12 months. The stock is up more than 30% from last August's lows. Time now for Options Corner. Joining us to take a deeper look at Workday, we've got Rick Ducat, lead market technician here on Schwab Network. All right, Rick, so talk to us about the trends that you are noticing when it comes to the chart for Workday.
As you said, Diane, up notably off the lows, but really over the past year, not much movement in terms of net percentage gain. We're only up about 3% during the past 52 weeks, and we're underperforming, or Workday is rather, underperforming both its own technology sector and the S&P 500. So, if we were to consider our candle chart here, we can see that Workday has broken through this downward sloping trend line that we established starting with these highs near 294. However, we are approaching, once again, this ceiling near 280, this red dashed line representing a repeated stopping point for price in terms of the closing price here. But for now, though, it's looking like perhaps we have lost this trend line as we head into this earnings event here. Notice we have clustered moving averages altogether between about 250 to 255. And momentum has seen a bearish downturn breaking below that threshold of 70, so no longer overbought.
Okay, no longer overbought there. So what's the approach for an example trade for Workday, especially given that we've got earnings in front of us?
Sure. So a quick look at our next chart, just to briefly show one thing, is that our volume profile is heavy around this same area here where I mentioned our moving averages. That's where volume starts to drop off. So that 250 strike seems notable in this trading environment here. So selling a put spread at around that level takes advantage of the higher implied volatility as we are approaching this earnings event here. So what we would want to do would be to sell one contract of the June 20th 250, 245 put vertical at a 130 credit, max profit 130, max loss 370, roughly 1 to 3 risk reward to risk or so. And we can see too that break even is below that 250 area. So even if we did get an adverse move here, the odds are more in favor of this particular trade, as you can see based on our shaded area on our risk profile that represents the expected potential move.
Okay, that's an example trade for Workday. Put vertical is the approach there. Thank you, Rick.